All right, these are the items in my core watch list, which I've tagged. So my core watch list is like stocks I'm interested in general, and the tagged ones are those I like to look at least once a day because they're, of special interest. They don't warrant being in my bear pen for various reasons, although some of them did have good down moves this week. So here we go. Abercrombie and Fitch. This is basically way too late. Um, you know, it's already lost like 60% of its value, but it is sort of fun to see yet another complete wipeout here. We had a wipeout here, a wipeout here, a small wipeout here, and this one seems to be well on its way. Here's Broadcom. This used to be my bear pen, but it's fallen so far so fast. It's really not much of a pattern per se as it is. It's kind of a descending channel. It's got a series of lower lows and lower highs. It's just kind of also getting wiped out. This peaked in last December, and it's lost about $80 since then. So about 35% of its value or so. Here's Alibaba. Chinese stocks are definitely on the descent. This is one of the very heavily traded ones in the US. Here's Caterpillar. It's kind of slowly descending from its channel peak. Here is Chemours, which I'm quite fond of actually, but it's pretty thinly traded, and I just didn't have the patience to wait it out. But it has been slipping nicely. It was down on Friday about 4 additional percent. And as I've said, I fully expect this to be in the low single digits by next year. Costco, this one, it was like fake out, fake out, fake out, fake out. This one actually worked. And it peaked at 1078 on Feb 13, and about a month later, it was in the 800s at times. But it's not really worth messing around with. I mean, I don't know. No. I mean, I've mentioned it before because it's very richly valued. 54 PE for a place that sells like large vats of mayonnaise and toilet tissue, but very well managed company, obviously. Caesars, this is dropping nicely. Um, why did I not get bearish on it? I don't know. Maybe it's just too slow of a mover, but it breached key support here, and it's in serious trouble. I could easily see this in the teens within months. Here's your old friend ELF Beauty. Massive head and shoulders on this one. And I wouldn't be at all surprised to see this just getting bashed down to the 40s and the 30s and so forth. Here again, just don't really have the patience for it. It's a little more thinly traded, but it's a very, very nice long-term pattern. Here's a rare bullish chart, EXCL, just kind of nice to keep an eye on. Another bullish one, Gilead Sciences, which actually managed to go up a little on Friday. Goldman Sachs, kind of a mess. There's kind of a pattern right there. Actually, isn't terrible. But yeah, there's just much better fish to fry than those criminals. Here's Halliburton, breaking down beneath its support like so. Right triangle pattern on this one. Like so. Hilton, having breached this trend line anchored all the way back to the March 2020 low. Nice dip today, and it's clearly brought ruin to that trend line, so that's busted. IBM, this one, very sloppy trader. It's been range bound in 250s, 260s, just messy. I would say that it would probably bring some support to the market in general if it can seal up this gap at 227.95. Intel, very broken company here. They've had these kind of bursts of excitement. The most recent one was when they announced a new CEO. Like, that's going to make any difference. But this peaked here and then has been slipping. But it's, as you can see, even at the peak mania of NVIDIA, Intel was just a total, relic from the 90s. Here's Mondelez, which I had fun with during this chunk, but I avoid it now because I find it odd that it's been so strong. It did rally beautifully up to this trend line and then fell back. It's kind of interesting the relationship it has with this trend line, but yeah, there's so many good stocks out there. Why not pick the best? Here's MGM, another nice clean top. This might have a place in the old bear pen, actually. How's the PE? How's the PE on this? 11. Yeah. MicroStrategy. I wouldn't trade it, but it's always interesting to watch. I know some of you are really into this. This is down over $35, over 10%. I think Bitcoin will be in big trouble, so that'll help drag MicroStrategy down. I keep calling it MicroStrategy. They've renamed it Strategy, but the MSTR throws me. Here's Murphy Oil, which I think is a very clean top. 28.85 is the stop on that, and you can see historically, top. Those tend to be followed by long drops. Here's Netflix, which got just shellacked, 42.87. I had kind of bailed on this one. Here's the channel that's been in place for years, and as I've said every time, recent tops have been fake outs. The prospect of that kept me away from it. And earlier this week, it looked just like another fake out. It seems to have lost that gumption again, but it's an oddly strong stock. 45.9 PE on that. Here's our old friend Nvidia, which is trading at the same level it was trading like 14 months ago. Well, actually not 14 months, excuse me. More like 10 months ago. But yeah, not very interesting at all. On Semiconductor, down 6.44%. This I don't know what this company does, but boy, they must really be in trouble, because the stock is trading where it was in April 2021. I mean, think of that. 4 years. 4 years and no change. I mean, it had a change formally, but net no change in 4 years. So they must be just like in a dreadful position strategically. Reddit continued to fall. I'd say the gap here represents support. This has lost way more than half of its value. Shopify, like Netflix, kind of a weird beast, kind of a funny personality, but this trend line seems to be kind of an interesting relationship, because we went zipping toward it, met with resistance, and then began to fall. And this one, I believe the PE is bonkers. 60.3 now. It used to be crazier. And then finally, a company we have heard of, and which is having the Tesla takedown on Saturday, fell to 263, just banging around the Fibonacci's. I think it'll take a very long time, if ever, for the reputation to heal, for the political stink to get off of this. As it is now, it's very much a meme stock conflated with the new administration.